Good morning, good morning. Welcome everybody. Great to have you here today. Just need to change the pip count here. It's crazy these days when I get you, there's already quite a few messages in the chat there. Good morning guys. Welcome. Coffee's bad for you in the morning. Yeah, it is. I think you need to wait a couple hours before you drink coffee. I've been up since like 5:30, so I'm having my cup now. Not that I normally drink coffee, but I just felt like it. Oh, Nico, yeah, I think today, if you go to the range, we must make a plan. I'll post. I need the Monster Money mug. Okay, so pretty tough here. GJ, if we zoom out to a 4 hour, let's have a look at this. That's tough, but we're still holding below key areas here, 162 and 161.5. And because of that, we could potentially say that for now, the fear brought on by the banking crisis is still lingering. There's still potential for us to drive down here on GJ. Although yesterday we closed bullish on the daily candle. These candles are printing side by side. So we need to have a deeper dive into the lower time frames and get an understanding of what's going on there. So you can see that we formed support right around here at 160.750. So below there, we have left some clean traffic here. You can see on the 4-hour candle, obviously we are bearish. I know this is very different. It's very, very different. But I noticed the other day that with the 4-hour candle closing at the beginning of this session, the 8-hour candle is also closing. So, the 4-hour is, you could already consider higher time frame. But that 8-hour, between 4 hours and a daily, there's a lot going on. And that 8-hour kind of fills the gap and can sometimes give very nice confluence. So we've closed bearish here on the 8-hour for what it counts. I think it's something that I'll start to have a look at now and then, because like I say, that candle is closing right at the beginning of the session. It could give us direction for the rest of the session. So like I say, close bearish here on the 8-hour, 4-hour, and then lower time frame. We can see that we've got a support level here at 167.50. This 15-minute support to the left, which we are respecting, and then below there we've got this clean traffic coming down for about 70 pips. Looking at the yen index here, we are also still maintaining that bullish movement here, obviously as a safe haven in these times of uncertainty. the yen will be stronger. So that could relate to these moves to the downside here on GJ. Then touching on gold, right now this price action is quite tricky. I don't want to play guessing games in this area, and I would say that obviously we are still, respecting bullish structure here, but whether we actually get the move up to retest these highs or not, that will depend on a couple things. So if we do get that move up, if we do get breaks above 1988, I'll be interested in buys above there. As you can see, that's leading us into some cleaner traffic, and if we're breaking above that key level, I believe you could get that continuation up. And if we get that, that'll indicate to us that the fear in the market is still holding a lot of weight. There's still a lot of uncertainty, and investors are obviously rushing to still put money into these safe havens. If not, maybe we just stay in this range today leading up to FOMC tomorrow. So that's also a possibility, something we just need to remember and stay patient today, waiting for a little bit more conservative setups. Like I say, breaks above 1988 I think is going to be the play here for buys. And then the other thing is, the banks, central banks, governments have been hard at work to stabilize the panic brought on by this banking story. So as you can see, we had that surge up yesterday, but we corrected that entire move, and right now you can see volumes kind of died down. So if we start to see breaks below 1967, we could start to potentially see some of this move being corrected, and then breaks below 1957, you've got a lot of clean traffic here, and we could see that corrected in time. But I think for now the focus is on the Fed to see what they do tomorrow, and today we'll just take it as it comes. Like I say, waiting for these slightly more conservative setups. GJ, I could say that this whole range here would be a no trade range for me. You can just see visually that this price action to the left is very tricky. It's very choppy. We've got key areas at 162 and 161.5 where we could see rejections at any given time and see that bearish pressure come back in. So I don't want to just be taking sells here, because yesterday we had this rejection off of this clear demand area at around 159,500. So overall we are just in a range. So we need to just be careful in this area here. Safer buys above 162. And then even though we're still in the overall range, sells below 160.750, we can then anticipate that bearish momentum coming back in, moving back to the bottom of this range. If we zoom out, there is definitely still range to come down all the way to 157, even 156. So we'll have to see. But lots of rejections here on the daily. So very, very tough area right now. We just want to stay patient. Wait for some clear setups. Up at 5:30. Yeah, Tom, have to early bird gets the worm, they say. So I won't lie, I had my alarm set for 4:30, but I missed it. Pinky promise, eh, Nico? Very pinky promise. All good, Jared, all good. Does SA follow daylight savings? No, we don't. I think daylight savings is only the northern hemisphere does that, as far as I know. Tom, Australia doesn't have daylight savings, do they? I also think for Asian session, I don't see any change in their time, so I don't think they do it either. It seems to just be a North American thing. Obviously, higher up the what do you call it? Summer solstice and winter solstice. Fuck knows. Go Google it. You have daylight savings in Australia. That's very interesting. Maybe it's the more southern areas. So obviously the closer you are to the poles, the more there is a shift of, daylight. Let's say in the summer you're gonna have a lot more daylight. Whereas here, we're a little bit closer to the equator, so it's like it doesn't really change much from winter to summer. Might be a little bit of a slow day here. And the times are just a bit out of whack at the moment over the last couple of weeks, because with America's daylight savings, earlier this month, we've had the 4-hour candle closing a little bit earlier. And with that, we've seen yesterday, for instance, we had that volume coming in on the new 4-hour before the stream even started. But then again, London Open is still at 10. So I think when London Open reverts back to 9 o'clock South African time, I think I might start looking at starting the stream at 7. She's okay. But Australia is quite a bit more south than where we are. Forex factory is tweaking out. Okay, so today we don't really have anything high impact here this morning. Got some USD news later on. Tomorrow we do have some GBP news. Come on. So yeah, we have CPI tomorrow for the pound tomorrow morning. And then in the evening, we have FOMC interest rate decision and their press conference. So that's obviously going to be extremely high impact. And that's why today may be slow. I always say that you need to be aware of the fundamentals coming up because, you know, obviously last week we had plenty of volume with everything that was going on. But if there's nothing crazy going on and we've got FOMC this week, you know, generally the week before might be quite slow as well. But I mean, today I would imagine would potentially be quite slow as the markets await this news. And then on Thursday we have the pound interest rate decision. Yeah, here you go. At 2 o'clock on Thursday. They're still expecting 25 basis point increase, but there have been rumors that the Bank of England wouldn't raise rates. Just like there have been rumors that the Fed wouldn't raise rates, but I think they most probably will. And if they bring in a surprise increase like 50 basis points, that's going to bring a lot of strength to the dollar, and that could easily result in a nice correction of this move here to the left. So don't expect anything crazy today, but we've got very nice price setups for FOMC where we could, like I say, either correct this move to the downside or we get a move back up to these highs formed yesterday at 2008. Hey Jared, GFC. It's kind of weird how yesterday we tapped into 2008. We're talking about this because obviously 2008 was the global financial crisis. Just a coincidence, eh? I wonder. Ooh, Ned. You're cheating on me, bro. Where's the loyalty, G? Fed priority still is inflation. They will increase by 25 basis points and stop after most likely. 100% the priority definitely is inflation. I think they've learned from the past. I don't think they'll make the same mistakes as the past. Taming inflation is definitely going to be their priority over economic stability, because at the end of the day, if we look at history, we've seen what's happened in Germany, we've seen what's happened in Zimbabwe. You know, when hyperinflation hits, it hits. If you don't get that under control, then there's no controlling it. So if they were to take their foot off the gas now, it's tickets. But it's kind of a lose-lose situation, because obviously the economy is struggling. We're already seeing that. But the reason these banks are collapsing is also a result of greed. Poor investment decisions based on greed. I hear SVB actually didn't have a risk manager for like 8 months. They left like April last year. So they had no one watching their investments, basically. How, like, you're a bank and you don't have someone managing your investments. That's just asking for trouble. Mad how bad these banks are managed, to be honest. And we're talking about big ones like credit. Exactly. It's insane. But at the end of the day, you know, they're run by people. People make mistakes. People get greedy. It's human nature. We think that these institutions have everything in order, but at the end of the day, like I say, they're run by people like you or me. Maybe a little bit more qualified, but at the same time, also in a position to let that power get to their head, let that greed get to them. And that affects your decision making. Clearly, they made some bad decisions. SVB was basically trading without a stop loss, just like FTX. They should have watched the streams. Would have taught them all about risk management. And you know, it doesn't just go for banks and that, it's governments as well. People have faith in the governments, like, no, you can't. They're the most corrupt. They cheat the most. Andrew Tate. Everyone here better be an Andrew Tate fan. But anyway, he said that, you know, if you took a couple of guys off the street and you had to make them go play basketball and say, okay, the winner gets $10,000, do you not think someone's going to cheat? Like, you would almost expect them to cheat. So do you not think that these people in power will do anything to maintain that power? Like rig elections, you know, like, there's so many corrupt people in power. Just about everyone's probably corrupt in a position of power at this point. But a lot of people just go along with the system, you know. Go to school, think that's the way things should be, get indoctrinated, can't think for themselves, and they're just another gear in the machine. What is your take on sales below 160.800? Yeah, I've basically got that marked out. I've got it a little bit lower, but much of a muchness here. That's pretty much what I'm looking for today. Bars above 161.7. So you're looking at bars above this right here. Just personally, I'm willing to miss out on this 30 pips or so, because this 162 level is quite a significant level. So I'm just looking for the buys above 162. That'll be the safest play for me. Because yeah, if we had to mark this up, you know, there's no real clean range here to the left. He's selling right into a rejection area. That's very tough. Looking left, it's a very, very nice key level. Definitely. I see why you're interested in that level. Just obviously, personally, I'm looking for the safer bars here above this level. 162. Also a nice round psychological number. Do you trade prop firm or your own? I'm actually in the process of moving brokers. So I have chosen a broker. I moved from Dominion Markets. Nothing wrong with them. I heard about the Traders domain story and I got kind of spooked. So I just wanted to move to a regulated broker. Someone who's been around for a little bit longer. And you know, that's just my personal preference. So I've decided to actually also diversify. So I'm going to be using 2 different brokers. What about bars above 1986? Because a 30-minute counter resistance. That's fine. If you want the bars above 1986, that's fine. I already mentioned I'm just looking for slightly more conservative trade ideas here today. So we can see here to the left, 1988 is quite a significant level. That's the only reason I want bars above there. Looking to the left on the weekly here, we closed exactly at that same level where we had this previous weekly resistance, 1988.5. So a very significant area there that I would rather just wait for price to break above for those bars. Make sense of this current circumstance? Not sure. When you're getting a payout from the challenge, how much depends how much profit I have. Getting a payout at the end of the month. Hey bro, I'm glad that this is local and informative. My trading skills have improved. Tabo from thank you Tabo. Welcome. Good to have you, bro. It's nice to have the South African guys here. I know there's a lot of nonsense in the South African trading community, or trading industry. So trying to just pave the way for a slightly healthier industry. Make sure guys are doing the right things. Stop paying for stupid courses and robots and signals. Tell us the dirt on Dominion. Nah, really no dirt. I mean, like I say, I had no complaints. And when I actually withdrew my funds from them, they gave me a call and had a chat to them. It looks like they are looking to get regulated. And just to clear it up, because I don't think we were sure who was the owner exactly, if Raja was the owner or just the face. Apparently Raja is the owner. But like I say, I've got nothing to complain about. I told them I was very happy with it. I just personally, for my own peace of mind, I've made the move. That's all. There's nothing wrong with them. funnily enough, the guy that I spoke to on the phone from Dominion Markets, I meant somehow it came up that, okay, I have a YouTube channel and I do the live stream. And then he said, oh, like, what's your channel's name? So gave him the channel name. He's like, oh, I was on there the other day. Like, what are the chances? Trading education is expensive. Here it's free. But the thing is, with free stuff, people only value things as much as they paid for them. Unfortunately. So you need to be able to identify real value for your own sake. Because this is free, you might walk away and say, okay, or, whatever. But there's guys here who have identified the value and come back time after time. Do you trust him? Bro, after what Uncle Ted did, I don't know. I don't know who I can trust. But I would rather just look after myself. You know what I mean? Don't want to get caught lacking. What broke you with now? Looking at, well, I've actually deposited funds into Tickmill already. And then here, Fusion Markets as well. So I'll diversify. I have 2 different accounts. Like someone said, yeah, protecting capital. I mean, a big thing in this game is capital preservation. So this is just another way to, you saw my ID, fuck. You know, look after your funds. Do you know they were all in a massive MLM together? I think that's pretty much what happened. Yeah.
What broker did you say you bought?
Tickmill and Fusion Markets.
Is that the one that you came to a conclusion that you're going to go to
Yeah.
based off the research that person did for you?
Yeah. I mean, those were basically my top 2 when I was having a look already. And then, yeah, she just confirmed that they are really good. Tickmill's actually got offices here. Tickmill's got offices here in South Africa as well, which is very cool. Yeah, the name of?
No, I was going to tell you to send me through the name of the 2 brokers you're looking at, so that for my love.
I don't want to speak too much on this situation. I mean, I don't know. This is just also a little bit of a, like, speculation. Just what I've heard here and there. And I mean, the guy on the phone from Dominion Market said that Raja and Ted had a fallout, which actually makes me feel a little bit better, because I do believe that Raja does have integrity. After what Ted's done, if it's true, which it does seem to be true, there are articles saying that there was fraud going on and that kind of thing. I do believe Raja has that integrity. I don't know about Ted, like I say. It's just very disappointing. You think you can, like, trust someone. Not that I knew the oak, but, you know, he's like a role model in the trading community and then goes and does that. It's just really like disappointing. Makes you just think twice about who you can trust. Anyway, did you hear about the 25 basis point tomorrow? Yes. I think what went wrong was these PAM accounts, which is like the investor accounts, where you could follow his trades and I don't know. You can have a look on Google it yourself, you know. There's some info out there. Very difficult to trust people where money and women are involved. That's hectic. Very true. But especially money. Will you hold a lot of money in a brokerage, especially if it is unregulated? I mean, if this is how you want to make money, you might need to. But that's why I'm looking now to diversify. And I mean, relative to what other guys are trading, I don't have a whole lot of money. But for me, this is what I've got. And I'm gonna look to keep it safe. So there's a 77.5% chance that they raise the rates by 25 basis points. And a 22% chance that they keep them the same. If I'm reading this correctly. Okay, so it looks like we are seeing some volume to the downside here. Rumen, you know what, for now I think you should be fine. Like I say, when I spoke to the guy on the phone, it sounds like they're looking to get regulated. You know, which gives you some peace of mind. At the end of the day, regulation doesn't stop these things from happening. Look at the banks. The banks are regulated, but people go try to get their money out. They don't have capital. Exactly, there we go. So this is unregulated or not. If someone wants to run away with your money, they will. So just gotta be careful. R41L, start sell. Look, I mean, just because prices started to move now doesn't mean that you need to just immediately get into a trade. You need to wait for some sort of setup to come to you. You should have a plan, you should have something that you're looking for to execute on. You should know exactly at this point in time what you're looking for today, or at least for the session. If you are blindly just, oh, prices started to move now, let me take a trade, you're going to be lost. So go mark up your chart, go create a plan for the day, plan out some trades, send it through to the Discord even, I'll have a look for you. But stop running around like a headless chicken.
Yo, Con.
Yeah.
Something we're not clicking. Remember what happened last time when markets started moving, like the price started moving such like thick volume,
Yeah.
and then we didn't realize that like such a small space holds so much pips. So
Yeah.
look at the last hour candle, just the last hour candles. Or
Hey,
current candle.
too much
On the hour,
volatility.
It doesn't look like it.
Fuck.
Good. When I looked at it now, it was over 100 pips.
Bro, I think we should just go mark
Looks
up
like a-
support and resistance on a 5-minute.
It looks like a 15-minute candle, bro. And it's got a fucking 100 pips plus in it. No. Market's doing that funky shit it did last time. To be fair, at least we don't have 3 15-minute candles, 100 pips each, eh? At least.
Yeah, at least.
In consolidation, sorry. Let me put that in there too.
I think things will slowly start to settle down, but we've still got this volatility. There's still these big ranges that price is trading in. And you know, it doesn't look big, like this could be a 40 pip range here, but no, it's like 120 pips. So it is something we need to obviously just keep aware of when taking these trades. Yesterday was very tough in terms of actually getting positions with a reasonable stop loss, because based off waiting for like a 30-minute candle closure, your stops are then like 80 pips. Doesn't make sense. I've learned that trading is all about psychology. It's not knowing how good you are with analysis. Exactly. Actually, I spoke about this yesterday. You know, when you're using a demo account, for instance, sure, you can learn how price moves, you can develop a nice strategy and everything, but the real skill is learned when you put money on the line, because the real skill is how you manage your emotions, how you manage your psychology, because some of the best analysts in the world may be the worst traders, because when it comes to executing, it's a different story. You gotta have balls to execute. You don't need balls to put lines on a chart. Have you ever thought of using... No, I've never ever actually thought of using any other prop firm. Morning, gents. Just for later, when the Canadian data comes out, CJ could... Alright, just make sure you do homework on that. Blueberry regulated by ASIC. Okay. I actually wasn't even sure that Blueberry was regulated. That's good to know. Jared, looks like you're in the clear. There's subsidiary of 8 cap. Interesting. stop loss shouldn't matter if your percent risk is always the same. Thanks, Patrick G. I didn't know that. How can a pair be oversold or undersold? I mean, yesterday we could have said that gold was overbought, and then it just decided to run another 300 pips. You know, the market's going to do what the market's going to do, and you can't have these preconceived ideas. The second you say it's overbought, oversold, you're setting yourself up with a bias. Because even though we are trending up, even though the market is bullish, if you think it's overbought, you'll start to look for sells, which just doesn't make sense. No, Patrick, I mean, the thing is, we talk about this all the time. Obviously, in terms of pips, your stop loss doesn't matter. It really doesn't matter. Because you can simply just adjust your lot size, obviously. But then you also have to think about targets. Because if I have an 80 pip stop, then I need, let's say, a 160 pip target for that to justify that stop loss. And that's basically saying that I'm expecting price to move 160 pips. Those trades, you can't force them, you know. They just sometimes come. Also, in terms of the pip count, you know, that is something that we keep a record of for the signals and for the stream. So I'm not going to... I would personally would have a 100 pip stop loss if I needed to. If it made sense, I would have a 100 pip stop loss. But I don't want to start to set these expectations for people thinking that a 100 pip stop loss is okay. Because someone's going to put in a 100 pip stop loss and use their normal lot size. And then what? Blow their account. Oh, Tom. Head and shoulders. Do you have sell stops or are you going to wait for? I've got no trades here just yet. Still in the range for me on gold. Guys, I'll be right back. There's really not too much going on here. We'll see how the hourly candles close in 15 minutes. But may have to wait for London open here for any setups. Might not even get a setup today. Just gonna take it as it comes. How much would a reasonable amount to fund with in rands? That's a tough one. You know, a lot of people ask that question, and a lot of people give different answers. The way I would approach it is put $100 into an account. I'm assuming that you probably don't have a reasonable amount to start with. I would say that, okay, if you really want to get serious, you maybe need like $5,000 to start. I think that would be reasonable. But most people don't have that to put into an account. So put $100 into an account. Go and trade that. Feel what it's like to lose real money, because you probably will lose that account. And then try again. Save up some money maybe. Put it into a live account. Build your discipline. See if you can grow that money slowly. If you can keep that live account, if you can not blow up for 6 months, if you can even keep that account at break even for 6 months, you know that you're doing alright. You probably just need to make 1 or 2 more changes, and through experience you will find that consistency. And then what you can do is you can just start putting a little bit of money into the account every month. So from your normal salary, to start topping up your trading account and keep trading your trading account. That's one way to approach it. That first $100 account, when you lose your first $5, blood pressure will rise. Yeah, you know, it's something you have to get used to. You have to, even if you have the funds, even if you have $10,000, even if you have $100,000 to put into a trading account straight off the bat, the reality is you need to build up your psychology to be trading that kind of money. Maybe you've worked with big money before in something else, so you're used to seeing big numbers like that. But trading is quite different, because you see the numbers fluctuate so quickly, and it can bring on a lot of emotions. So if you're trading $100,000 and you've never traded before, and you go into 1% of drawdown, maybe it's not too bad, but you see that and you're like, oh fuck, I lost $1,000, but now the thing is the trade is still floating and you should probably cut it, but you're feeling some type of way and you think, oh, maybe it'll come back. Next thing you're down 2,000, next thing you're down 3,000, and that's gonna really, really mess with you. Lost your first trade because you didn't notice NFP. It's one way to learn. My goal is $20 to 20,000. Good luck. It's gonna be a long journey. Game of chess, Jared, please, bro. Let's do it. Clearly not enough liquidity to continue driving up. Markets are a bit illiquid maybe at this point. Need to pull back to see us continue up, or otherwise we're just consolidating here in anticipation of FOMC tomorrow. Breaks below 1967, and we could start to correct this move here to the left. So we'll just keep an eye on this. Probably gonna have to wait for London Open at this point in time. Why is my board cut off like this? Jared, we've nearly got the same rating here at this point. I don't know what I'm doing here today. Oh, fuck. Jared, you're such an idiot. So am I. You could have just taken my queen. You didn't have to take it with your queen. What? I messed up. What do I do? Fuck that. You know that meme of that dog that's like sitting just sipping its tea but the house is busy burning down? That's basically me right now. Just ignoring all the danger. Gonna make another queen here. It's too late for you, Jared. Ah, no. No draw. This guy. Jared, this is gonna be payback for all the times you bought your queen out. Okay, well done. I was about to make a second queen. Five blunders. Holy shit. That's so bad. Seven mistakes, 5 blunders, 1 missed win. Goodness. Oh no. That is horrible. This is the most whack chess opening ever. Hmm. That's a good move, Jared. Well done. I don't know what to do. The rook! Oh shit. I fumbled this hard. How many funded accounts did you pass using Roger's strategy? None. 0. How about you? My rook is trapped. Gotham students all over. What's going on this morning? Can you look at NAS? You're more than welcome to send a chart to the Discord. I don't really look at NAS. Jared, I think you threw this game. What a comeback. What a comeback. Oh shit. Man, opposite draw. No man, Jared, dude. Just give me the satisfaction of checkmating. Okay. Okay, GG's, Jared. That was a tight one. Gold just straight up ranging. GJ, we have seen a nice move up here so far. So based off the daily candle closing bullish yesterday, and we are seeing these rejection wicks here. We could see us start to slowly break above 162 to then correct this move from that Credit Suisse story. But for now, you've still got too many issues really, or personally, there's too many issues here for me to be taking buys into this area. Safest buys will be above 162. Too many rejections in this area. You're better off just waiting till we get into this clean traffic here to the left, where we could then see this whole move corrected. There's no point in trying to force, 40 pips or whatever, 30 pips, when if you just wait, you've got 200 pips of clean traffic to take advantage of. For joy, you never know. You should know by now with me, Jared. Oh, especially in a situation like that. What's your opinion on gold? Current hourly flip. That's not a bad call. Personally, I won't take it. But it makes sense. So you've closed below that area right there. Arguably, you've got this clean traffic down to 1967.3. Won't lie, that doesn't look bad. You'll stop here on the flip. You'd have a pretty big stop loss here. Obviously, we already discussed stop loss doesn't mean too much. Like the size of it, pips wise, doesn't mean too much. In these volatile markets, it makes sense that, okay, your stop needs to be above the previous 30 in this instance. That's 60 pips, just lower risk. But also looking at the risk to reward, to me, it's not really worth the risk. I'm basically viewing this as a no trade range for now. Like I say, looking for slightly more conservative trades leading up to FOMC. So if that means no trades today, that's fine. But this is what I've got marked up. That idea really isn't too bad. Maybe you want to wait for the 30-minute to close. See if you get that bearish 15-minute. Because then you're forming resistance here. You've got this 15-minute support. Okay, that is the market maker. Hopefully there's some volume now. There's actually Tickmore phoning me. See, it's got such good service. I know that these brokers calling, like, it can get annoying. But it's not like they're trying to sell me anything, it's like I deposited a bit this morning, following up, gave me a deposit bonus, like, it's just good service, Rachel, my account manager, she's so sweet. Conflict of interest, don't go there. What are you talking about? What the heck, mindset? Is there bad luck in trading? No, there's only a lack of discipline. Lack of discipline, bad mindset. There's no such thing as bad luck, no such thing as good luck in trading. This is the market. We work in an uncertain environment. We play the probabilities. There's no luck. You have an edge, just as the casino has an edge. When the owner of the casino at the end of the month sees, okay, I made this much money, he doesn't say, oh my word, I got lucky. No, there's a business plan there. There's a model that they follow. Just as in trading. You know, you're going to have these days where you have these big wins and you're going to be like, oh, yeah, that's amazing, luck. But you're probably not going to base it on luck. You'll probably think you're just fucking amazing, which is maybe not the truth. Maybe you did get lucky in that instance, but if you were following your plan, you shouldn't be getting too excited. I mean, money comes and goes. It's just numbers on a screen. It's nothing really to get crazy about. You should do this because you have a passion for it, not because of the money. For good luck in trading. "30 minutes until London Open, so we'll see what happens. Hopefully we get some sort of setup by London Open. Otherwise, might be a no trade morning for me. Looks like we're seeing some profit taking on these safe haven assets. Yen index is struggling to push up back to these highs here. Looks like the momentum to the upside has died down temporarily, just as is on gold. Just consolidating here. We saw some bearish momentum. You know, this move doesn't look big, but we already had like 110 pip drop off this morning. So like I say, a little bit of profit taking from these safe haven assets potentially. Like I say, the banks have done a lot of work to stabilize this situation. We would need to see more information coming in, I believe, to actually see us even come back and retest the highs formed yesterday. London Open is not open now. It's still at 10. The UK only does their daylight savings this weekend. On Sunday, I think it is, the 26th. It was only North America that changed their times last week. So obviously this is London session, London markets opening, and they haven't changed their times just yet. So the market open will only shift when they change their times. Yeah, London Open is at 8 a.m. in London. Right now the time is 7:30 in London. So we've still got about 30 minutes to go here. Guys, I'll be right back. Funniest videos we can play. Shaq 007. I'll add you now. You can play a 5-minute game. Sorry guys, I'm muted. TR Alex, do you think UJ will sell off now? You see, the thing is, I don't trade these pairs. So what would be best is if you could send a chart to the Discord, and then I can have a look for you. You know, send me your analysis. I'll tell you what I think. Today's actually a Japan bank holiday, so UJ might be quite slow at the moment because the Asian market's closed, and obviously the North American market's also closed right now. So I probably wouldn't even bother on UJ. It's generally a slow pair already, you know. We are at quite a significant level here. I don't think I would be jumping into sales anytime soon. Also with FOMC tomorrow, they are expecting the Fed to bump up the rates. We may see that bring a little bit of strength to the dollar here. Because it looks like I say, we are seeing some profit taking on these safe haven assets. You know, we had a surge in gold, we had a surge in the yen over the last few days and weeks with the whole banking crisis scare. Now it looks like that may possibly be priced in, and we could see some corrections of that. So on UJ, what that would relate to is with the stronger dollar coming back in, with profit taking on the yen, we could see this key support area hold. Structurally, obviously, we are still holding this bearish structure here on the intraday time frames. As long as we hold this level where we're sitting now, you should be alright for potential sells. But I would wait for a solid resistance to form there. Maybe even possibly wait for a support to form, and then a break below that support. I wouldn't just sell it right now. I don't see any confirmations to sell there. UJ and gold generally move almost inverse, because it's obviously both relating to the dollar, and gold and the yen as of late have both been acting as safe havens. So they are probably moving very similar to each other, and we're seeing here, obviously gold is still in a range, but so far we've had a bit of a move down today. We've still got more room to move down, and by the looks of things, I do think that we could see some of this move being corrected. And then on UJ, what that could relate to is starting to break some of this bearish structure, starting to push up to your next key level of resistance here. So gold, we have formed that resistance on the 15-minute. Previous 30 was a weak bearish candle there, bullish candle. It looks like your hourly candle is about to come and flip bearish. %90 of traders take random trades until they break emotionally. 90% wait patient. 10% wait patiently for their trading edge and win. Very true. Very, very true. These sells do look decent here on gold, but at this point I'm waiting for London Open. With trading, I feel like it's necessary to break yourself mentally so you can have perspective and bring yourself back to be a better trader from the ground up. I think if you get the right guidance off the bat and you get a good enough understanding of what to expect in trading before you dive too deep and before you lose too much money, you don't have to break yourself. But it certainly is an important step in a lot of traders' journeys, actually getting to that mental breaking point, like you say, before you realize that something has to change. You have to make some sacrifices. You have to cut out all the crap and start to do things the right way. I had that at a point, and it was definitely a shifting time in my journey, you know. I remember that day clearly. It was during lockdown. I was staying at a friend's house and I was on the phone. I was actually on the phone to my dad, I think. and I was just broken, like I was fried. I had I had too many things on my chart. I had too many different things I was focusing on trying to mash together too many strategies. And in the first few months, like, I saw some profits. I think a lot of traders do see some profits in the first few months, and then you take a loss, and then you want to find out, like, how can I avoid that loss, and you try to learn something new, and then you add something new to your strategy, and before you know it, you're focusing on all these different things. You've got 100 different indicators on your chart because you're trying to avoid a loss. But the reality is, you need to come to terms with trading and what it entails, and it entails losing, and a lot of losing. If you have a 60% win rate, over 1,000 trades, you will lose 400 times. Not a lot of people can handle that. Yeah, exactly. Nico's also been through it, and I've seen that shift. So maybe it is necessary. I do think with the right guidance, you could do some damage control, If you're going through it alone, it's going to be very tough, because when you feel that way, you don't know where to go from there. What is your win rate? About 60%. 60 to 65%. But I am fortunate that I've always had someone there. Nico is actually the one who introduced me to trading. So I always had someone to be there for me through those times. Waiting for this setup as well, but on the 1 hour time frame. Yeah, I'll see. You know what? We formed a support here now, and there's about 50 pips range moving down. Yesterday's candle closed bearish. So the fact that we've formed a support right here, and that here we've got this clean traffic to the left, this might be a sensible trade idea. So if you could maybe close below there on the hourly, let's say, I might look at that position. I also feel in the beginning, Instagram can screw you up by watching others' profits, and you use 100 different strategies instead of focusing on one strategy and sticking. Yeah, that's extremely true. They say comparison is the thief of all joy. And when you come into trading, you see these other guys flexing, cash, cars, the lifestyle. You want that. You can't deny that you want that. And it creates this hunger, and you try and go for it. But the thing is, you're in a very different place in your journey from that person. That person you're comparing yourself to has been at it for 5 to 10 years, whereas you've just started, and you forget that it takes time. You compare yourself, you're trying to see what they're doing. How are they doing this? How are they making so much money? When the answer is, it's taken them a shitload of time to get there. So you can't compare. You need to focus on yourself, build up your skill, if and when you can, take away a little bit here and there from these other traders, but don't mash together too many different strategies. Don't listen to too many different traders either. If something resonates with you, stick with that. If this style resonates with you, then you better be here every day. But don't come here on this stream, then go up to a SMC stream, then to another stream. Stick with someone who resonates with you, a style that resonates with you, and master that. And also tailor it to yourself. Guys come in here and say, oh, this is like Raja's strategy, whatever. You know what? Raja and I trade very similar. Obviously, I've learned a lot from him. But at the same time, I've also tailored things to myself, for what works for me. And at the end of the day, we are just looking at price action. So it's objective. So regardless of who's looking at it, at the end of the day, price action is price action. So a lot of the time, you'll see us looking at the same things. Sometimes I see after my stream, I still follow Raj on Instagram. I go see he's taken a very similar trade. I could very well say, oh, he was watching the stream. But no, we're just seeing the price action for what it is. Yeah.
I just want to say to the chat, listen to when Connor is speaking. He's not telling you to watch him. Even he's on his own stream telling you to go find who you resonate with. So he's not even saying, come watch me. Like, that should tell you enough that the Oak's trying to help you. So if you don't listen and take in what he says, then that's on you, no one else.
Yeah, exactly. If the style doesn't resonate with you, then you don't need to be here. I'm sure anyone could take away something, but if this style is not for you, then there will be someone out there teaching a style that will resonate with you better. And another thing is, most guys doing the live streams, we're doing day trading, we're scalping, whatever it is. Maybe this style is not even for you. Maybe you need to be swing trading. And it's going to be very difficult to find someone doing a live stream on swing trading, because that's a long, it's a long thing. Swing trading, you sit down 30 minutes on a Sunday, plan your trades for the week, set your alerts. That's it. There's no live stream for swing trading. But I mean, there's plenty you could take away here in terms of psychology for swing trading. Before, honestly, my trading discipline breaks when I saw Raja IG story. He took a few trades, but I always get around luck. You see, that's the thing. He's got experience. And another thing is, in doing these live streams, you gain a lot of confidence in what you're doing. And he's got a big audience. So he's gained a lot of confidence in what he's doing. He's got a lot of experience. You can't compare yourself to that. Are you looking for the sales below 1973 because it's a 60 pip range and also volume? Yeah, it's looking pretty good here to drive down for that range. I am going to wait for the 30-minute candle closure though, for London Open. Gold, wait for us, please, bro. He's also got multiple sources of income trading from just one of many sources. That's very true, and that takes a lot of pressure off you in trading. So whereas you, whoever you are, if this relates to you, you might be trying to trade as your primary source of income. That's your way out. That's what you're relying on to make money. You've got no other money coming in. That puts a lot of pressure on you in your trading. It makes it very difficult to make the correct decisions because of all that pressure on your shoulders. Whereas someone who has multiple streams of income, who's not really, desperate for that money, they can trade without that pressure and they can make a lot more clear decisions. So if you are in that situation where you are relying just on trading, it's going to be very hard for you. It is. And you're going to have to shift your mindset. You need that abundance mindset. Because if you're relying on just trading and you are desperate, it's going to get very tough for you. That's when you start to force trades in a range and trade in unfavorable conditions because you want to take a trade every day, because you want to make profit every day. Whereas if you have this abundance mindset, and I even touched on this in the introductory webinar for the members, that abundance mindset where you know that if you just stick to your plan, that the profits will come. If you build the skill, the profits will come. That's why I don't mind if price is in a 200 pip range, price action is ugly in that range, I will wait. If we sit in that range for a week, no trades for me that week. It's as simple as that. Because I'm going to wait for my setups to come to me. And when they do, I'm going to execute. And win or lose, I know down the line over enough trades that I'll be consistent. The secret to love, health, and money. Where you guys from? South Africa. So gold's pretty tough here. Hourly closed, no bottom wick. Now one thing that I look at with no bottom wicks is these days I'm not too concerned with them. But the issue is when we start to close with no wick and we don't have a whole lot of range moving down. I know we've got about 30 pips here, but visually speaking, this is not a lot of range moving back down here. If you look on the hourly time frame here, we've closed with no bottom wick at this key level of support in and around 1970. So to me, there's no range moving down here. I need to see that break below 1967 for further sells. So this is looking like no trades for me on gold. Let's have a look.
That's cock. Yo, that's just so cock.
Pardon me?
I said it's so cock. The one thing we look for, and then it shows it. Something we didn't want.
Yeah, the one thing we didn't want. Looking at the DXY here, we're holding below this key area as well. Looks like there's potential for further downside on the dollar. Just relating that roughly to build some confluence here. If that were the case, maybe we see a bounce off of this 1970 level. But it's very tough now because we're just ranging. very tough. And then GJ's still got some way to go for a break above 162 here. You can see having a little bit of a tough time in this general resistance area. Maybe we see a rejection off of there, but still, this to me would be a no trade range. I'll wait another 20 minutes or so, see if volume picks up. You never know in these conditions, you know, sometimes it's dead and then all of a sudden you get these wild swings out of nowhere. So maybe we get that break below 1967 here on gold. Maybe we get the break above 162 on GJ. But I'm not looking to stay here too much longer. So I'll maybe see how the 30-minute candle is looking like. Da-da-dum-dum-dum. Yeah, these songs playing every day. It's kind of repetitive. Need to play some Drake or something.
Yeah, man.
Yeah, you can.
I just wanted to drop in to sing you some Drake verses.
Thanks.
God's plan. God's. I hold back. Sometimes I won't. Yeah. I feel good sometimes.
Enough. Oh shit. Oh, Nick, are you cutting out there?
Thought that was my internet. No.
Volume's coming in hot here. You know, this is trading. It'll do that to you sometimes. The bus will just leave without you. It was actually quite a big move here.
Very big, yo.
Still plenty of volume, still plenty of opportunity. If we can actually just get a closure below this level without pushing down too far here, there's still opportunity to possibly get involved. So it's just a matter of waiting for a closure. We see that volume coming in. So let's just stay patient here. See if we can get a nice 30-minute candle closure. Based off what the previous hourly did, I could even see this candle coming back up and respecting 1967. So I definitely would want to see us closing below here on a 30-minute to give us that confluence to continue down. Sure, someone is screaming that they missed the move. I'm sure they are. Well, plenty of volume coming in. Let's see what happens. I must say, this is probably one of the slowest live streams. I know that other guys are probably taking trades every day. A lot of the time we're sitting here just waiting. And you know, it's not the best for entertainment purposes, but in terms of teaching the correct qualities, as well as applying the correct qualities, such as patience, discipline, yeah, this is the stream, you know. We've moved up 100 pips here on GJ today. Moved down 200 pips on gold. You know what? I've taken nothing. And you know what? I don't care. It didn't fit my plan. I'm waiting for my plan to come to me. I'm waiting for my setups to come to me. And in preaching that, I hope that you guys take away something. I hope that you develop that patience and that discipline to wait for your setups to come to you. Understanding that, although yes, this is a YouTube stream and everything, it's nice that we have a community and it can be entertaining at times. At the end of the day, I'm here to teach the correct things. Just because we're moving down with all this volume, I'm not going to jump into anything. I'm not going to force anything. I'm surprised there's no one in chat saying, oh, you know, why are you not taking these trades, blah, blah, blah. You guys are great. But I hope that you're taking away something and applying these principles to your own trading. Appreciate it, appreciate it.
But I mean, the way we trade, we also have the least stress possible. You know, we never worried about our positions, or we never holding positions to just see how far they can run. You know, we in, we out, 1 or 2 positions a day. We're keeping calm, we're keeping relaxed, and it's personally the best way to trade. The sell-off of taking less positions with more quality just keeps emotion in check, and I'm all about that.
Well, that's what the bigger guys are doing. They're taking less trades. You know, I don't know too many real big traders, but we always hear this. We hear this from them, that they're not taking trades all the time. They're looking for the best setups. And we can see it in, you know, one person that comes to mind, who we spoke about earlier, is Roger. If you look at the trades that he shows, he doesn't take many trades, but the trades he catches are generally pretty big moves. Very good moves, substantial moves. You know, and that's the mentality you need in this. Not to just be like a vulture trying to pick off the scraps, trying to take little bits here and there. Wait for your setup to come to you. When it comes to you, you will feast like a lion. So you need to be a predator.
You can't have hesitancy when it does come to you.
Hey? Yeah, you can't
You
have...
can't have.
Yeah, you need to just execute. Six, 7 trades this month, exactly. That's mind-blowing. $340K trade yesterday. That is fucked. And you know, we sent that idea to the members. A similar idea, because I saw that trade on his Instagram. 340K. So yesterday, but by the time I came to the stream, it had already pushed up quite a bit. So I've started sending these breakdowns before the stream. Come on. So yeah, I saw those ideas as I woke up basically, but you know, I like to just wait till I come on the stream for a setup. I don't really hop on the stream and I'm in like 50 pips of profit and everyone's like, what the hell? But you know what, I don't really care what anyone thinks, it's just that it is actually out of my trading time. That's the most important thing. Would you consider sales if 15-minute closes below support? Honestly, I'd like to wait for the 30-minute candle closure. However, guys, you see those big sums, yet he's still only making 2 to 5%. Yeah, you need to also, remember that. Put that into perspective, like you were saying earlier on. Don't compare yourself. Because you can do the same thing on your account, not monetary-wise, but percentage-wise. There's nothing stopping you. You just haven't got to that point in your career yet where you have built up that capital. It takes time.
It takes years and years and years of stagnant process only for 1 year to change your life. Am I dipping off here?
Yeah, you are.
Okay. I'm gonna go back on YouTube there.
Okay, cool. But yeah, years and years of hard work, and sometimes you don't see the results for a long time, but that 1 year, that 1 month could change everything. You just got to see it through. Stay committed. Are you considering trading in this session, or are you going to return for New York Open volume? I'm open here. I'll see how the 30-minute closes. Maybe a little bit tricky, but we'll see. Not desperate or in a rush to take anything, but if gold can close below 1967, we'll see. Had my first profitable month last month, been trading for 1.5 years. Amazing. Well done, bro. Yeah, just keep at it. Keep at it. Also remember 1 month being profitable, you know, it's not a big enough sample size. So just keep your feelings your emotions and your psychology in check, and make sure you did whatever you did last month. Make sure you can replicate those things that made you profitable last month. Do the same things again this month, and then again the next month. And like I say, the main thing now at this point, if you've reached that level of consistency, you can do it for a month. You've proven to yourself you can do it for a period of time. What will make all the difference is, at this point, keeping your emotions and psychology in check. And that can also take experience. But just keep that in mind. Keep at it, keep chipping away. That's amazing, bro. 1.5 years to see some profits, that's amazing. Not everyone gets to see results so quickly. Anyone who's new here today, understand that that's something to be proud of. Not everyone's going to see returns so quickly. For some of you, it may take you 5 years. Some of you, it may take you 10 years to see your first profitable month. And the issue is, by then, most of you have given up. I'm new, I'm so lost right now. If you're lost, pull out Google Maps. I'm sure you'll find yourself. Otherwise, have a look at babypips.com. Babypips.com has all the basics. If you're new to trading, you're in the wrong place right now. I'm not saying that I can't help you, but you need to get the basics down. Otherwise, most of the stuff is going to go over your head. That's just the reality of it. I'm happy to help newer guys, but you have to put in the time as well. There's no use in me spending 20 minutes explaining to someone what a candlestick is, when everyone else here knows what a candlestick is because they've put in the time. So maybe I'm helping you, but I'm wasting everybody else's time. And I'm wasting my own time. I don't need to explain to you the basics. I've gone through the basics. That's the least you could do. Babypips.com. Not even trying to sell you anything. There's plenty of information on Baby Pips. There's actually more information on Baby Pips than I realized, because I was going through it the other day with someone, showing them what they can skip out, because there is some stuff on Baby Pips you can skip out, like harmonic patterns, indicators, Fibonacci. That stuff you can skip out, you know, like just ignore it, completely ignore it. So I was going through it with someone, showing them what they can skip out, what they should focus on. And I was going through this stuff and I'm like, holy shit, you know, if I had actually finished going through Baby Pips in the very beginning, it would have saved me a lot of time. There's stuff on monetary policy, market sentiment, psychology. There's so much on Baby Pips. I'm actually shocked. I never realized that it really has a lot of info there. So don't sleep on Baby Pips. What keeps you going in trading? You have dreams, ambitions, of course. I have a duty to fulfill. I respect myself too much. For me to not get out of bed, for me to skip the gym, that shows disrespect to myself. For me to break my trading plan, for me to not show up on any given day, that shows disrespect to myself. I respect myself too much to not show up. Also, because Baby Pips is free, don't think it's useless. I paid $1,000 in a course and it's all the same stuff. That's the thing, man. That's the thing. People, I already spoke about it today. People people value things as much as they pay for it. And that's why, you know, sometimes the stream, people take it for granted. But the people who see the value, they stick around. Like I say, I personally stepped on Baby Pips. There's a shitload of information on there. Even if you have been at it for a while, if you don't know about central banks, if you don't know about monetary policy, good stuff, Lowry. There's a lot to take away there. I know I was muted, sorry. I'm not too sure what I was saying, but something along the lines of, if you have been trading for some time and you don't know about monetary policy, you know, central banks, market sentiment, go and have a look at Baby Pips. There's some nice information on that stuff on there. Even brokers, how brokers work and that. You know, a lot of that stuff you don't necessarily need to know. Like, once you've got a decent broker, okay, you're fine. Like, you don't need to know how it works. If it works, it works. But when actually picking a broker, you kind of do want to have a bit of background knowledge. Now, the other day, I was going through Baby Pips, the broker section, to figure out a few things, you know. What broker would you recommend? Hey, wait, let me get my referral link first. I've moved to Tickmore and Fusion Markets as well. So I'm actually going to be using 2 brokers just to diversify. In times like this, I think it's best to diversify. We've seen banks go under. Who's to say a broker couldn't go under? Go have a look. I did some research, really top class brokers. Also, had a chat to someone working in a finance department, and they also had a look for me, had a look at the regulations of these brokers, and they agreed that Tickmore and Fusion Markets are really good. Why did you choose Mount Forex Funds as your prop firm? It's the best prop firm. What about XNES? Nah. I don't rate XNES. Just from personal experience. Maybe they've made improvements. But I have used them before. Got like 4 pip spreads. Obviously, maybe I was on the wrong account. But also just the execution, like market execution, and they will offer you a requote. So it will come up with a pop-up, say your orders have been requoted, whatever, do you accept? Okay, accept. By the time you accept, the price has already moved 10 pips on top of the 4 pip spread that you've got. Like, what the hell? There's 15 pips of profit down the drain. So no, XNES, not a fan. Maybe I'm talking shit, I'm talking out of my ass, but that is what I've experienced using them, and it was a long time ago. But do your own due diligence. I think there's better brokers out there for sure. But aren't you pissed about 1 month withdrawal? No. I'm just grateful for the opportunities that they present. no matter how long it takes. What is your biggest withdrawal on a funded account? It's about 35,000. $. $35 months for what period of time? Oh, for a month. What's gold telling you with that wick? Possible rejections to that level here. I did mention that we could even see this hourly candle come back, flip bullish, and just stay in this range. Dollar seeing some weakness this morning. So you could see us get that bounce off of this 1970 level. Bars at this point would be quite aggressive, because you're just buying into this range, you know. I would rather wait for safer bars above 1988. That means no trades here this morning for gold. GJ had a nice push up here, but yeah, you're still trading below this area that I'm interested in taking trades in. I'm wanting to take advantage of either clean ranges. So looking to the left, yeah, you've got clean traffic. Or key levels. So, you know, this is a key level here. We need to see a break above there for me to get involved in bars here. Gold, we are sitting at a key level. So that's why I'm anticipating possible rejections here to move up. But the issue is, like I say, you are just ranging at this point. I would rather just stay out personally. Tomorrow's FOMC. I'm fine if I don't even take a trade in New York today. Saving the bullets for tomorrow. I know tomorrow there'll be nice volume. Hopefully some nice one-sided volume. Right now, there's a bit of consolidation. Obviously some profit taking from these huge moves over the last week. Could see corrections, but we'll have to see if we can actually hold below this key area right here. That's a lot, like 500k. That's trading though, and that's the opportunities that these funding companies present. But don't compare. You don't know what I went through to get to that 500k. You don't know how many accounts are failed, how many challenges are failed. You know what I mean? You don't know the process I got to that. Last year, in rands, I made maybe 3 times that. But I started off 2021 on the 10k. I lost the 10k funded challenge. Second one I tried, I got on. I got a payout from that 10k. I took that, I funded a 100k challenge. From the 100k, I passed first time, and I got a very decent payout on the first time. And then immediately after my first payout on the 100k, I went and I lost it. And then I failed a couple more challenges after that because I was like just mentally burnt out, because I've gone from trading very small capital of my own now to a 10k, now to 100k, taking a R500,000 withdrawal, and then it can stuff you up. So you need to understand that you don't want to actually get there too quickly, because with me getting there too quickly, I did some of the wrong things to get there. Over risking, although I had the experience and I could pull it off, it's not something that was sustainable for sure. So I would rather do things the right way. And as you guys have been watching the new funded account that I've been doing now, just taking the signals and everything, I'm doing it the right way. You can see it's been a lot slower, a lot more gradual. Tax wise, isn't a pain to deal with. No, I leave it to my accountant. The funded account is normally equivalent to the amount we pay for the package. No, it's not. What lot sizes do you normally use with my Forex funds? 10k, 0.2, 0.3. You can start to push it to a 0.5 if you're in a bit of profit, maybe. That's just my personal risk tolerance in terms of percentages. Drawdown is the same as you pay for the account. No, it's not. On a 100k funded account, are you telling me you pay $10,000 for that 100k trading account? Because that would be retarded. I think it's $500 to apply for a 100k account, and on that 100k account on my Forex funds you get 12k drawdown. So yes, you're not really trading 100k, you're actually trading only 10 or 12k, because that's the drawdown you've got to work with. So essentially it is only a 10k account. That's how they get you. But if you've only got $500 but you've got the skill, you might just be better off giving these funded accounts a shot. But like I say, the key there is, do you have the skill? Do you have the consistency? If not, don't even try. Rather trade your $500. Go lose your $500 in your own live account, and you're going to learn a lot more there. Drawdown is not the same as what you pay for the account. It's not. You pay $500, for instance, for 100k, and you get 10k drawdown. 500, 10k. 500, 10k. There's a 9,500 difference there. Okay guys, nothing's really lining up here, so I'm going to call it a day. Gold has closed above this level, showing some signs of rejection to the order block to the left. Okay, so I'm going to call it a session here, and there's no trades for me. Yeah, I'll see you guys tomorrow. Take it easy. Just remember FOMC interest rate decision tomorrow. When we have these big events coming up, sometimes markets can be a little bit slow. So just take it easy. Remember, tomorrow there's going to be plenty of opportunities. There's no need to rush anything today. If we're in this range on gold, Even GJ, if we're not getting the breaks above 162, it's going to be a tricky one. CPR tomorrow for the pound as well. You know, the markets are anticipating this news coming in. There's still a lot of volume and volatility. We could still see some of these moves corrected if we do break above these significant areas. But just keep in the back of your mind the news tomorrow. And don't expect fireworks today. I'll see you. Cheers, cheers. My bad. If whoever was talking about that funded account drawdown story, if it was the other accounts, then maybe that is the case, that however much you pay for it is how much drawdown you get. But that's why I say that the evaluation is the best value for money. It takes time, but good things take time. So these rapid and accelerated accounts, leave them alone, man. It's nonsense. Anyway, just wanted to clarify on that. Cheers, chat.